right, everybody, welcome back to the Mind the Growth podcast. The bubble has burst. My name is Chris Kinghorn. Eric Hoffman, how are we?
We're hurting as usual these days. Interest rates are up again. Inflation's still above 8%. Market's a mess. Real estate's in turmoil. Crypto's in the dumpster. Who knows? Doom and gloom on the horizon once again.
So when we first started this podcast, everything was just
up and to the right.
Up.
Yeah.
And now we're finally coming down on basically everything. The everything bubble has popped.
Yeah. So today we're recording this on Wednesday, September 21st. The Fed announced a 75 basis point rate increase. I was betting on 100, aka 1% versus 0.75% for those lay people out there, because BIPs aren't commonly known unless you're familiar in finance. But nonetheless, just consistent, slowly taking their foot off the gas pedal. Frankly, I think they should rip the Band-Aid off, raise it 150 basis points, and just get things in order. That would be a lot quicker and maybe more painful for some on the short term, but better in the long term. What do you think?
I think you're crazy.
Yeah.
It's one of those, I like you, but you're crazy.
Wild card.
If they would have done 150 or 1.5, you didn't say a full point, you said a point and a half,
yeah,
right?
Yeah, exactly.
If they would have done a point and a half, they would have had to do it. I'm just trying to factor, because it was
there would have been
quarter points, and then it was half points.
Let me be clear.
Then this is the third 75 basis point jump.
Let me be clear. There would have been anarchy in the streets, so no disputing. But it would have ended a lot quicker. That's what I'm all about: efficiency and time management. Time is money. We all know that.
If they would have came out after, so the first raise was a quarter point,
yeah, and
that was when inflation was still working its way up. So I think they were also trying to factor in inflation, and CPI was significantly low. What they were reporting CPI was significantly lower than actual inflation of what it was. But that was when the housing market was just cranking. Used cars were selling basically the same price as new cars,
double in some cases. More.
Just absolutely insane.
Yeah.
So in my head, I understand why there was kind of this slow increase of rates. I think if we would have just came out of nowhere instead of 25 basis points, just boom, 150 points or 1.5 points, it would have been, but I could understand maybe like a full point when they moved to 0.75, because they did half points for like a handful of months, and then the last 3 go rounds have been 75 basis points. So I could have seen like, okay, we're just going to go from a half point to a full point, boom, rip the Band-Aid like that.
Yeah. So let me use a different analogy. Would you prefer to be slapped in the face medium speed for the next year and a half, or take one punch to the face and be done with it?
Who's punching me?
Doesn't matter.
Jake Paul?
Yeah. Jake Paul. Let's go with him.
Can we just call Jake Paul out now?
Yeah. What do you think,
Jake Paul? How's your crypto doing?
Not good. That's why he's still boxing. Comment below on what you guys think should have happened, or what you think is happening. And if you think it's right or wrong, I want to hear everyone's thoughts.
Yeah, I understand ripping the Band-Aid more. I think retrospect, like hindsight's 2020. So understanding that by doing 75 basis points, 50 basis points, then 25 basis points, then 50 basis points, then 75 basis points, obviously that didn't work as effectively as we would have wished it had. Maybe they should have started with half points and then moved into full points, but I don't know. We'll see what happens. I'm thinking that the next 12 to 18 months, there's going to be quite a bit of leveling off, but I also think it's healthy. We cranked so hard for the last 10 plus years or so. And, even if there's another 10 to 20 to 30% correction in the market itself, I think that's going to create an opportunity for buying. And I could see us really rebound after that. And, the next 10 years going forward, fortunately for us, we're young. We've got quite a bit of timeline left on the horizon.
Yeah.
I think this is ultimately going to come out to be a great buying opportunity for us, and this is going to create a lot of wealth. This whole ordeal is going to create a lot of wealth when you look kind of fast forward 8 to 10 years from now.
Yeah, ideally. That's a few.
Or we're all screwed, one of the two.
uh, yeah, I mean, it's just so hard to say. Even today, right as of now, the S&P 500 is down 1.71% for today, which was bizarre because the entire day until the Fed announced the increase, it was up because people were expecting.
Well, what have the last 2 days been though?
Uh,
Because it's priced in my opinion.
yeah, it's down 3.62% over the last 5 days. So I over the last two, hard to see. I got 1 day and 5 days on
Yeah.
Google.
Yeah, Monday and Tuesday
Yeah,
it got kicked in the nuts. Friday it did too, I believe.
yeah. But the point is when what's expected occurs and then you still have a down market, it's just so unpredictable. And our buddy Michael Burry of the Big Short fame, he's claiming, which he's had pretty decent accuracy so far, that we're still maybe uh, only a half or 3/4 of the way through the total downturn. So we're not even
I
close
agree.
to the bottom yet. So it's just so hard to know, and hard to know where to put your money to work right now, even if whether you have dry powder or not. That's another another story.
I just think it depends on what your horizon is. And
Yeah.
this is not financial advice, but you either just dollar cost average and it is what it is. If you're not going to touch that money for 20, 30 years from now, or you hold on to cash and
But I'm looking.
wait till things
But I'm
just
looking.
get really bad.
I'm looking for 100% increase in the next 30 days. So how do I do that?
You better find yourself the ultimate shit coin
Yeah.
and just
Pump.
we can pump it up on the podcast.
Deal. Okay. The MTG coin we're gonna release and dump it 10 days
We're
later.
also doing NFTs
Yeah.
too, apparently.
We'll see. Speaking of haters, have you seen some of the new comments on the YouTube page?
I have.
Someone
We officially have haters.
like random. Someone was saying we're wearing makeup or something. I forget the specific comment.
I know. I forgot my makeup
Yeah,
today. Shoot.
foundation.
I did get I was in Mexico, so I did get a little bit of a tan.
Yeah, I don't tan, so that's out of the question for me. But there was another one. It was like just a weird comment that didn't even seem to be related to the clip. So just thought that was weird and strange. But nonetheless, people are apparently watching and wanting to comment, so that's good.
Could be worse.
Could be worse. So touching on crypto for a second and then moving on to bigger and better things. The Ethereum merge is official. We're now on proof of stake chain versus proof of work, and it took an absolute nosedive. So I think it's down like close to 20% since the merge happened or something to that effect, which is wild. And everyone was expecting it to just shoot up. But it appears that people were putting a lot of money on both sides. There was a lot of liquidations that occurred, and just in general, the market's still taking a downturn. So crypto got absolutely hammered this week and the end of last week. So not looking great, but still in it. And now I have a bunch of Ethereum proof of work coins that are worth like $5 each. So I don't know if I'd ever be able to cash those out, but that's something. Comparatively, I mean, it's what 98% lower valuation than my other holdings of Ethereum, but still,
Right.
It's technically on the balance sheet as of now.
Well, there's a lot of I think so. That was a huge change for fundamentally that's going to make it a better program in the long run.
Yeah.
So I think the market is just in such a bad space right now that it doesn't matter if great things that are happening, whether they're fundamental or just hype. But this is a big point for Ethereum. A lot of people probably don't like this statement, but I'm a huge Cardano fan, and Cardano's been a proof of stake for quite some time now. And they're about to, the Vassal hard fork goes, it launches tomorrow. So there's another huge piece of infrastructure that's coming to Cardano as well too. And a lot of these other coins are doing great things, but I think the market is just in such turmoil that we're not going to see. It doesn't matter if the best thing in the world happens tomorrow to Bitcoin, Ethereum, Cardano, Solana, whatever it is.
Right.
we're at a standstill for a little bit. So hold on to it, keep buying. I think there's going to be a shift. I think there's going to be a shift quicker in the cryptocurrency ecosystem over the traditional stock market itself.
Yeah, totally. I agree. And I'm hopeful. And yeah, long term outlook, it's going to be much more efficient. So I'm still riding the wave and putting my money where my mouth is. So all good. Now, another segue, another company's putting their money where their mouth is. Adobe took a huge swing of $20 billion to take on Figma. Pretty wild in the age of.
They think they're still in 2021,
Yeah,
right?
yeah.
Is it?
Those
Do they not
valuations,
know what's going on right now?
those valuations don't quite line up, but nonetheless.
Can you give a quick breakdown of the valuation, what they paid, and kind of what it's based on, the valuation perspective?
Yeah, I mean, typically with SaaS businesses, which Figma is a SaaS business, valuations are viewed in terms of ARR, annual recurring revenue, so membership revenue that they bring in. They're expected to bring in about 450 million this year. It's not yet been, finished, obviously, because we're not at the end of the year. So that remains to be seen. But I think the value or the ARR for 2021 was around 200, if I recall correctly. So the valuation is just pretty wild. I mean, what is that? 100x ARR for 200 million.
Yeah, but we're also okay.
Yeah.
So we're basically done with Q3. We're very close to being done with Q3. So you can almost generate it based off of this year's. So
exactly.
It's if they do 400 to 450, then
still 50x ARR, which
50x,
according to the professional investors, which I am not one, ARR multiples right now are closer to like 20 to 25 for good companies, but there's caveats. If you listen to the All In podcast, you'll hear the David Sachs rant about the fact that this is no ordinary SaaS company. They've skyrocketed over the last 5 years, and they're just continuing on that trend. So in reality, if that trend continues, if Adobe can manage it appropriately and integrate it into their tech stack, or even have it run as an independent business, it's going to be a great acquisition long term because it's a juggernaut of a company, and they're basically taking chips off the competitive landscape. A lot of people are calling it anti-competitive. We'll see what the Fed says, if anything, or not the Fed, the
SEC.
Yeah, SEC. And I had the Fed on my mind, but we'll see if they say anything. But it's doubtful, and they're basically removing a competitor, strengthening themselves, and becoming more of a monopoly, which is the best business you can have, really. So we'll see. It seems to be a good acquisition overall, just a huge price. What's your thought?
Well, and then Dick, I kind of want to reiterate what you had said, just so in case some of the listeners didn't fully follow on the growth projection. So they essentially, in the last handful of years, they've gone from, call it, what was it, $700,000 in ARR to they're projecting $400 to $450 million this year. They had years where they had 6x, 3x, and now it seems like there's almost a doubling of revenue. So even though you're paying a 50 multiple, and I'm going to get into multiples here in a second too, because that landscape has changed quite a bit as well too. Even if you're paying a 50 multiple now, companies with that type of revenue, with that type of growth, that doesn't occur too frequently. So if they are able to double revenue to 800 next year, and then if they're able to get to, $1.5 billion, and if they're able to get to $3 billion, that would be a massive feat. Then it looks like a steal for Adobe at that point. But in the VC world, as well as the M&A world, valuations are going down. Multiples are going down. In the construction tech space, there was quite a few 20x multiple acquisitions that were going on in the last year and a half or so, and there's now some that are being done anywhere between 7 to 10. So we're seeing that change quite a bit. I mean, Silicon Valley, if you're raising money from VC, if you're a reputable founder, you would go in and raise a seed round raise $1 million at a $7 million valuation, or try to, depending on if that was, if you had a previous history, or, it was, if you didn't so much, then you're going in and you're giving away somewhere between 25 to 30% of your company going into your first check. Those are kind of in the past as well too. Everything is slowing down. So I do think it's a little bit ballsy and risky for Adobe to be doing this, but I think they were very smart by picking, not only trying to monopolize their ecosystem, but also finding somebody with such fast growth. I think it's priced in. So it might look like they overpaid, but ultimately I think they bought a vehicle that's not only going to increase their revenue, I think they're going to be able to squeeze every penny out of it, that acquisition. So
yeah, and they definitely paid a price for it over the last 5 days. When they announced it, their stock tanked to like 20%. So that wiped off like roughly 20 billion in their stock valuation. And now it looks like they're down about 11% over the last 5 days overall. So yeah, the market doesn't seem to like it, but who knows?
And the market doesn't seem to like it because they had done, so everyone knows, they had done a raise not too long ago at a $10 billion valuation. Right. And then less than a year goes by, Adobe buys them for $20 billion.
Yeah.
So that's where a lot of this knee-jerk reaction is coming from.
Totally. Yeah, it's going to be interesting to see what other mergers and acquisitions take place from now to the end of the year. Because
it's going to be interesting to see what IPOs happen in the next 18 months.
Yeah. Did you hear
Chamath just taken down to SPACs?
Yeah, wound down 2 of them that I lost like 50 grand on for both. Yeah.
Jeez.
So I bought IPO D and IPO F. Those were the 2 that I believe he wound down based on the quick success of the first 4 that he did. I bought him I want to say at like $14 a share. I watched them go to like 20 a share. So I was in great shape. Then they tanked to like high 9s, low 10s. I wound up selling for like 11 a share, but I put a decent chunk into them. And so obviously I lost something that I would prefer not to. Nonetheless, I think by winding down, they just reissue everyone that holds $10 per share, because that was what they were released at. But it's a pretty big deal that he couldn't find 2 companies over 2 years to be able to acquire. And I mean, it's not surprising because the first 4 now, in hindsight, were terrible acquisitions and they are not trading well. So, yeah, another grifter, it seems. You can at me.
I'm just going to at VOO and BTI. So,
yeah.
You live it's a painful day over here.
Yeah.
It's a painful day over here, Eric.
Speaking of
we're
pain,
hanging in there.
Just to touch on the watch market before we wrap up, prices are continuing to come down. I listened to and I read a few people in the watch market or in the watch game talking about how they predict we're going to see, Rolex GMTs sub 10,000 on the gray market. We're going to see Daytonas in the 20s and possibly low 20s, Submariners down around a little above retail price. Are we going to live in a world where the watch hype dissipates and the retail price and the aftermarket price are not so far off, you think?
Well, I think that everyone is just going through a really rough time right now. So you're not going to spend, okay, before I go there, I went into an 80 not too long ago, a few days ago, and they still claim it's a year for a sub. So I don't know if they're just putting their poker face on or if it's legitimately that long to get a sub through an 80 right now, but there is that aspect. But if people are struggling to make their mortgage payment, how many people are going to be buying Rolexes? I think we're going to see this division of, in the next 20 years, the middle class is just going to get absolutely beat up, and think there's not going to be so much of a middle class. So I think that there's always going to be those people who are going to be able to buy Rolexes and that are, going to spend money where they want to spend money. But I also think a lot of the smart people who do have cash are kind of just holding on to it. Why go spend $30,000, $40,000, $50,000 on a watch right now when you can probably wait 6 months, get it for 30-40% cheaper, and maybe pick up 2 of them at that point. So
Yeah, I mean,
it'll come back.
that's my view. And I also read something that was interesting to me. I can't remember the brands, so don't quote me on this, but a few years back when there was some turmoil in the Chinese market, where I think the Chinese government cracked down on what was happening in terms of government officials giving out and taking a lot of bribes, which included luxury watches, luxury cars, things of that nature. So the market dried up to a degree. And there were 2 brands, I want to say like Cartier and one other, but I could be wrong on that, that literally bought up like $500 million worth of inventory at the time and literally destroyed them. Just destroyed the watches, and they ceased to exist, which kept the scarcity they were hoping for, kept prices level or up. And I'm curious if some of these top tier brands may do something similar, because there's going to be so much inventory that's coming on the market. It already is. That's why prices are going down, is people can't, sell their inventory that they've been stocking up on, and they don't want to sell it at a loss. So that's something to look out for. I'm wondering if a play like that's going to happen to still artificially create the scarcity they're hoping for.
The only brand that'd be able to do that is Rolex.
Yeah, maybe. I mean, AP's doing a lot right now. They just talked about how they're going to expand their production facility to be able to produce more watches. They're probably, still riding that hype train. They may do something. They're relatively savvy. I don't know if Patek would do anything because they're just so small. I don't know. We'll see.
All right. Well, hopefully we don't see a bunch of watches getting smashed in a harbor somewhere, or in a port somewhere in China.
I would doubt they'd smash them. What I would guess is what happened is they just like literally took the raw materials and repurposed them instead of buying new raw materials. Just eliminated those serial numbers essentially, so they no longer existed. That's what I would do if I was the CEO and I wanted to do something like that. I don't know what happened, but that's my guess.
Talk about disrupting the market.
Yeah.
That's a play there.
Yeah, we'll see. All right. I think that sums it up. Until next time.
We had enough fun for today?
Yeah. I'm going to go cry myself to sleep.
Go buy another SPAC.
Yeah. All right. See ya.
All right. Cheers.
Bye.